Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday, and we're at the 17th of April, 2023, and the time right now, 6:15 p.m. Central Time. Oh, there's my Ivy. We haven't seen her in a while. She wants to be on TV. I'll pick her up. We'll know in a minute if she starts by my feet. Interesting day. Once again, we're back in the earnings season. And so far, earnings are a beat, not a miss. That's absolutely against what we keep hearing from analyst upon analyst that keeps looking and saying, this is where, and I hear it every quarter, this is the quarter we're going to see the impact of those interest rates. I'm wondering, we're coming to the end of the Fed raising rates. I don't know if there's 1, 2, 3 hikes left in the market. I don't know. I doubt that there's 3. There could be. I give that right now about a 50-50 chance. Certainly I give like an 80, 90, 100% chance right in that range for the May reading to be a 25 basis point one. The other 2 I have an open mind on. What is the economy going to look like? If it doesn't slow down, and earnings aren't slowing down. I mean, yes, some companies are missing. We saw State Street miss today. That was a clear miss. But we're seeing the banks do okay. Charles Schwab lifted the market. Traders were very fearful as to, first thing, how much did they lose in deposits? Second, how much did they go to the discount window to take in? And I think they took in quite a bit of money there, $41 million or so. But they said they're not keeping that money. It was there as a cushion when the window opened. They didn't know what we're going to get. I wasn't really in love with how they weren't convincing me there couldn't be another run on their deposits. We'll see what happens. And of course, the stock's not bouncing much, and that's problematic always. Now, we're going to get better news tomorrow, I think, out of Bank of America. That should be good. And Goldman. These are banks that are too big to fail. So generally, those are okay. But when we drop down those middle tiers and so on, and there's a lot of them to come, I question where we're at. That is where the more damage was probably seen, and we'll see where that carries us. We get Netflix tomorrow. I'm doing this all from memory. Lockheed and I think United Airlines tomorrow. So how I remember, it's even beyond me, but I do. And you look at that and you say, okay, let's see what they do. But like I said, Schwab supported the market, didn't hurt it. Where the markets got hurt today were the metals and the energies gave up ground. I can't even begin to tell you the fundamentals as to why the energy gave up ground, but it did. It could be that we're at that time of the year where one of the reasons we rallied up in gasoline was what OPEC did, and then there's that maintenance conversion where you get out of making the winter blends and you go to the summer. And when you do that, American refineries get shut down. They have to be converted over. They convert them. You're not buying as much fuel at that time. I don't know if you saw how much we've sold out of the strategic oil reserve. Now we're up to 4 million barrels. They have 22 more million barrels to go before I think the end of the year. They're going to just keep selling them. The Biden administration doesn't know what to do. And these are the lowest levels that we've seen in our strategic reserves in decades. This is bad news. This is not what you want to do. The reason it's being sold is Congress had an act where you had to sell so much back. I wish they'd have changed that. It's not in America's best interest, and they could change the rules. I think it's a bad rule. Biden will love it because he'll say, well, it's containing energy. It's not $100 a barrel. It's 80. Look at the good job I'm doing. Joe, where were you at 65 when you were supposed to be buying that oil? You didn't buy 1 barrel. When we take a look at the metals, a little bit of pressure here, but copper holding up. We're waiting to see more data out of China on copper. That's going to be important. And in the stock market, well, we're going to take a good look here and see what the Bollinger Bands are doing and what they've been telling us about the marketplace. So the first thing is the weekly area chart of closes. This market's rocking and rolling. You're up for the week, 13.5 points, 1/3% at 41.77. When we take a look at the action, we've been in this congestion for a little bit of time now, and the pattern is still bullish. Higher lows, higher highs. That's bullish. The market is over the 18-day average of closes. Bias. Bias I define is if the market is over the 18-day average, the red line, to me that means bias is up. So if the swing line is up and the bias is up, I've got two pieces of the puzzle saying bullish. I next look to see where potential resistance might come in. Now, this is not the only resistance that can come in, but for the purpose of these videos, not my morning subscriber videos where we put on window envelopes, and I think you see a whole new element develop there. But that would be the 4234 area, okay? And momentum, this is called an embedded slow stochastic. So until this is lost, what is happening is the market is getting bought. Now, there's a key moving average I don't show you here. I do that in the morning subscriber video where that's where I think the pros are buying. So until the red line closes under 79, thumbs up, still bullish. Micro mini, NASDAQ. Nope, not the same picture. Number one, these numbers are under 80. Number two, they're over 70. They're overbought. My perspective is any reading over 70 in either of the numbers or both, either or both, not over 80, both of them, but over 70, they're overbought. You resolve overbought situations in one of two ways. You either drive it up where the numbers become embedded or the market breaks. I don't know which one it's going to do. Do we have a trend? We don't. We have a higher high and a lower low pattern. The battle's all at the 18-day average of closes, and it's not making a move for either of the Bollinger Bands just yet. The Dow is similar to the S&P. It has the embedded reading. Now, what it's doing is this is the first move where the market is trying to stay over the 100-day average. In the process, you may get much more bullish. Did that fall out of my mouth? Bullish? If the 18-day average crisscrosses that, I get another bull crossover, and then I get something else. Then I will have the short-term average, the 18, over the 100, the medium term, and the 100 is already over the 200. I have a classic bullish setup with an embedded reading possibility. This chart has to make a decision. Can it do that, or is it going to break back under the 100? These earnings reports, the first ones coming out this week, are very important. You know, we'll get earnings reports for weeks on end. You do know that. The season runs. However, it's the first ones that matter so much, and the bank ones especially are what this market is geared on. And in all honesty, it's just as the market thought. The mid-tier banks are having their problems. The big boys, too big to fail right now. Then we get over to the Russell, which is overbought. It either is going to embed or do something there. A lot of resistance points. You've got the 200-day average in green. In gray. In green, you have the top one, the 100, the upper Bollinger Band. Just a lot of resistance in a market that hasn't been able to do much of anything but drift sideways. When we get to the T-bond market, you're at the first short covering number. You've made your first move back down to the 100-day moving average of closes. That is a number that has importance. When the market stays over it this long, that's generally the support. It's the flip-flop of the stocks getting up to that number, and you're wondering, should I buy over it? It's the first test. Well, this is one that I'd be saying, would you dare sell under it? I don't think so, and you're oversold. 5-year note, identical. So you've tacked the yield back on as the market has caved in and agreed that the Fed is going to raise rates 25 basis points. But this phenomenal battle in the stock market, and it's not a battle, it's a win by the naysayers. They have won the day. It's a question of, do they throw in a towel? They have beat the heck out of the people saying interest rates going up should be bearish the market, should hurt the earnings, things of that nature. The people on the bear side of this market have been terribly wrong. It's that simple. It's what the charts are telling you. And by the way, you can find any one stock and you'll tell me that's the case. And you can tell me that as a whole, the market has given up. We know that. But a market that has gone from 0 interest rate to 5%, you would think that we'd be in a lot more trouble and a lot lower than we're at, and we're not. There's something to be said for that. In the dollar index, I'm still very much questioning, are we in the bear camp? Number one, you're correcting an oversold condition. So if I step back with you and we come down here and let's take a look. This is the lower Bollinger Band. That's the band. What I teach you is when you're oversold, you come to that band, what are you supposed to do? If short, it's the hardest thing, but you're supposed to cover shorts. Whether you want to cover it all or not, I'm not your broker. I'm your chartist, okay? And as a chartist, the way I would teach it is out. And you'll say, why? Because you're not embedded. The momentum's stretched out. This is where people are their most bearish. They're just blindly throwing in the towel. The market starts on an outside day to the upside, starts maybe correcting the oversold. The first resistance point, I can tell you, I think is going to be the 18-day average. And that's right where the market goes. And now the market's got to make a decision. If it gets back up over 102.48, you negate the downtrend. You cannot start an uptrend doing that, not if it were to happen tomorrow. But this is where the resistance is. Are the bears selling the market short? They might be. Because when you reopen, you're probably getting, if you open steady to higher, these numbers will climb again, and they'll probably probe it to see what that market's made out of up there. For me, that's an awful lot of risk. It's over $600 a contract on a normal trade. Embedded trades are different than those type of trades. Momentum trades are completely different than normal trades, and on normal trades, I don't like my clients take over a $600 risk. Embedded is different. Higher lows, higher highs, bullish. What happened? Overbought, got to the upper band. Are you learning this? Boom. What line do you normally go back to? Normally. I mean, you don't have to stop there, but normally. That 18-day average. What do you normally do? You're under it. Where do you normally go? You fight a battle. You did it first here. You came back. You settled right by it, and then you moved to the upside. It's often a resting spot. You're driving, you got to get out, go to the toilet, and you need a resting spot. The market needs a resting spot. It goes to the toilet, and then it says, what am I going to do next? I'm laughing. It's how you look at it. In the British pound, we got up, got overbought against the Bollinger Band. I'm reading how people are bullish that there. I was reading it over the weekend. I'm going, they're out of their minds. That market is primed to hurt people. I was reading it, I think it was Thursday, and I'm going, okay, I don't see it. I felt good today. In Bitcoin, I told you up here, we have a problem in Bitcoin. Ethereum is stronger than Bitcoin. It refuses to embed. And when you refuse to embed, you typically go back to the 18-day average to regroup. In Brent versus WTI, the differential is still narrowing in right here. When we look at the Brent, let me share a problem I have. The first challenge of a 200-day average is the equivalent of a what? A 1-year moving average of price, right? That's an awful lot of resistance that's there. And that's what the market's fighting. To make matters tonight even more complicated, you lost the embedded reading. So momentum has now been lost to the upside. Yes, it can be gotten back in a certain manner. If you take the course, you realize how that is. Tonight's an important night for the market. If it stays lost, that could be the goal. It doesn't have to go lower. If it wants to, the next layers of support are 82.28 to 82.54. But at the very least, the market is now overbought. Do I think overbought markets attract new capital? I don't. When you get to WTI, what happened here? We have not lost the embedded reading. This is stronger than the Brent. And when it loses it, it'll join that party. And the first objective would be the 200-day average and then possibly here. But right now, that didn't occur. Let's go to the next chart. The gasoline. This is a market that today, I told my traders, if you lose the embedded reading, you got to be out. Now, here's the good news. The market closes at 1:30 and trades until 4 o'clock. Now, when I say closes, settlement price. You have 2.5-hour window. One of the things you can do, and I told traders this at 11:30, I said, the market's made an important low. You can't let it keep breaking on you because you can possibly go back to 268, and from today's low, that's another 300 points. That's a big move. You can put a straight stop in, let the market see if it gives you a bounce later, and if it does, use that to mitigate the loss. And it's exactly what occurred during the day. And the traders, they were wrong on this last contract. So I were wrong. Right on the first 50%, we got out of that absolutely perfect, gave back money. Did we end up hurt? A little bit. Nothing big, very small. Okay, not everything can work. I'm Mr. Swiss Cheese. I wish I could tell you every trade works. Beautiful call by the slow stochastic being lost here. Watch. So often, momentum will do things before price. Now, let me just teach you this. Here is the market, and you lose the embedded reading. The next day, it gains it back. The next day, still there. Now you lose it again. For me, that's it. Generally speaking, what I've learned is when you're losing two very close to back, the market is telling you before price advances, it's lost that downside momentum. Probably not getting it back on the second. If losing it there, it's rare to the very next day drop back and get it back. And that's what you've done. Okay, so you learn how to work with this. It's all in my courses. So how do you get the courses? Just move your cursor up here, go read about it. You'll see, folks, it's super inexpensive. In addition, I give you 2-week access to all my research. So that pays for it, and you're going to get all this charting software that'll work with it as well. So you get the whole shoot and caboodle. It is very, very inexpensive. Go take a look. I'm Ira Epstein. I'll see you tomorrow. Have a great evening.